This is Investing University. So Investing University, it is a place where I want to teach you guys the fundamentals of investing. Some of you may be very, very seasoned in investing already. So pardon me if I go through fundamentals, because the reason why I'm doing this is as I set up my Super Investors Club, there are newcomers coming in and they ask me about fundamental investing. However, for Super Investor Club, I want to go a little bit more in depth into advanced options, advanced strategy. And I realized that I may have to spend a bit of time talking about the fundamentals. So I want to take this portion, really share this freely with everybody, because I think that it is important for us to get financial or investing basics. So same thing, I want to ask you guys a question. If you are your investing manager, will you give yourself a raise or will you fire yourself? If you choose to fire yourself, please learn investing wisely. And if after learning investing, you realize it's not for me, maybe you can consider our fund next time that I introduce to you guys. Okay, not supposed to solicit fund. All right. Oh, yeah. It is actually exactly like the 7 Baby Steps by Dave Ramsey and also the Crown Money Map. So I actually went into all these lessons. So I went to like Financial Peace University. I actually went through quite a number of things. So all these are references. Okay. So, okay, let's come back to Investing University. And before I begin, I want to say that number one, I am not a licensed financial advisor. I'm planning to become a licensed fund manager, getting my license this quarter, and I'll let you guys know once it's ready. Number two, this is not a financial advice. I can't give financial advice, and it's not a recommendation to buy or sell anything. Okay, so it is all my personal experience, and I do hope that you guys enjoy investing and don't treat it so seriously. In the sense, I find that a lot of people are too tied up about investing. So when they lose money, it affects them a lot. If you lost a lot of money before, guys, really, I want you to. It's like riding a bicycle and you had a very bad fall. Maybe you fractured your hand. It's okay. You can recover. Okay, definitely. So overview of Investing University Lecture 1. I'll be going through some basics because some of you may be very new. Can I check how many of you are very new in investing? You have not even started. Okay, maybe share with you. Share with me your years of investing. Is it 0? Is it 1? Is it 2? Is it 10? Is it 20? Is it okay? Sack and hang myself. Don't do that, please. Okay. So 0 investing knowledge, no problem. I'll be going through some of the key overview and I'm giving you guys some homework, which I believe it is useful. These are things I do with my kids. These are things I do for myself. Okay. So number one, why invest? Why do we invest? Well, let's quote Warren Buffett. He says that if you don't find a way to make money while you sleep, you work until you die. So for those who are doing 0 DTE, please sleep. After you, okay, this is an internal joke because for Super Investors Club, we have this strategy called 0 DTE where we make money every night. However, some people after putting up on the trade, they can't sleep because they're very worried. They never put stop loss. Please sleep, please position size. So how do we make money while we sleep? Well, either you open a business, someone work for you, or you invest in someone else's business or certain instrument. So now I want to share with you that based on, this is Dave Ramsey. Just now someone mentioned Dave Ramsey. So Ramsey Solutions, right? They did a national study of millionaires. And you can see that most of the millionaires, 79%, did not receive any inheritance from anyone. And the top 5 career, okay, include engineer, accountant, teacher, management, attorney. So I want to say that, so you can see that it's a different income range. I was actually checking what is the income of a teacher in US. An average, not a starting pay, an average teacher makes about $50,000 in USD per year. So $50,000, but their tax rate, effective tax rate is about 12%. So when I go and calculate, right, probably they are around the same income bracket as an average Singapore median income. Now, if you're in Malaysia, if you're from other country, what I want to share with you is, well, an average income can also make you a millionaire. Okay, yes, you can. I'm talking about you. And of course, if let's say you are a low income person, no problem at all. Because there's this story called Ronald Reed. He's a janitor. You cannot tell me that a janitor is making a lot, all right? So a janitor, he amassed $8 million of fortune and left most of it to his library and hospital. How wonderful it is. How many of you would love that? At the end of enjoying your life, building character, building relationships, working with God, you leave $8 million to actually a charity that you want. How many of you love that? If you love that, please type me. And I can tell you guys that it is possible. Because this janitor, right, let me share with you how he does it. So the secret is this. Okay, he actually amassed $8 million of fortune, not because he inherited anywhere. He take his monthly salary. Okay, you can see, I'm sure if he earned $50 a week, he invested $40 a week. Okay, he invests quite a lot. well, we should actually balance ourselves, correct? So he's a hard worker, but nobody had any idea he was a millionaire. So why is that so? This is clue number one. He doesn't pretend to be rich. He doesn't show that he's rich. So showing costs you money. Maybe think about that. Okay. So he left and a few things that he actually mentioned, right? He owned at least 95 stocks. I'm not saying that your portfolio should have 95 stocks, but here is another clue that investing into stocks did make him rich. This is not a portion that I want to sell you a stock program or anything, but this is one easy entrance. Why stocks is a good way to get started? Because with little amount of money, you can get started. And you can see this portion. He held for years, if not decades. So he buy and buy, accumulate. This is actually like a VC mindset. You know what's a VC? A VC is like a venture capitalist, like a Shark Tank. So Shark Tank business come to you, hey, would you like to invest into my business? Would you like to invest my business? And over the years, he invested into 95 business. I suspect, this is my own personal, from my experience, very likely not all 95 of them make money. How many of them make money for him to actually make a few $1,000,000? In fact, right, maybe 10 of them make money can already. Correct? Think about it. So if you invest into 100 businesses, you just need one or two of them to become the next Alibaba, the next Amazon. Boom, your wealth goes up. So this is also the principles of diversification. Okay, so this is something that I wanted to. Okay, he actually, they mentioned this. He, among his long-term holdings were blue chip stalwarts, Procter & Gamble, JP Morgan, General Electric. Okay, so this is not a recommendation to buy or sell. I'm just sharing with you guys that these are the things that he buy, and nothing fanciful, correct? CVS Health, Johnson & Johnson, all this you all see before, correct? I mean, for those who have been investing. So he's definitely not doing zero DTE. Okay, that one is a lot more advanced. So now, what is investing? Exactly what's investing? So a few things. Investing is deploying capital, okay, to generate returns over time. Three things: capital, returns, time. Okay, so you put money somewhere, give a bit of time, you take more money back. This is positive investing. You put money somewhere, after some time, take less money back. It's also investing or gambling, but maybe it's a fiat one. It's possible. Okay, there is risk in investing. So I want to share with you guys 3S of investing. This will be very similar, but for me, I like to use 3S. Some of you heard of it as 3M, but it is very, very common. These three things are very important. Number one, the strategies. You need to have a strategy for investing. If you just like buy and pray and hope, right, it's not a good idea. Okay, I mean, I love that you guys pray, but the thing is, we be good stewards. We do our due diligence through strategies. Number two, state management. How many of those who invested before, do you guys agree that the state management is very, very important? If you agree, help me type A. Because for those who are very new, they will never understand this. They say, what is it going to do with state management? Investing is A plus B equals to C. I just click and buy. Well, I shouldn't say strongly. I would, I mean, if you're very, very new, right, can I suggest you take $1,000, go to the stock market and aim to lose it as long as possible. Meaning you say, don't lose it so fast. Take that $1,000, but your aim is to lose. I want you to experience the pain of losing money in a conscious way. A lot of us who went through investing for years, we lost money unwillingly and it's so hard to recover. Some people maybe still have not recovered yet. So state management is very important, because if you don't know how to manage losses, you don't know how to actually manage even winnings, you will go crazy. You will go into Chinese called 走火入魔, okay, a demonic state. Now, the last portion is sizing. Okay, this is my t-shirt. Sizing is everything. Okay, why sizing is everything? Actually, once you do position sizing correctly, right? The sizing, in order to do sizing correctly, meaning you say no that, hey, how much money should I put into this particular trade? You need to be very aware of your strategy. Because if your strategy is not able to calculate for you the win rate, the probability, very likely it's not a proven strategy. A lot of strategy out there is just hearsay, correct? If it's just hearsay, don't invest, okay? Make sure that your strategy must be able to give you the percentage win rate. How many times I trade, how many times I'll win, how many times I'll lose. There's no such thing as a 100% win rate strategy. Number two, the strategy should also be able to tell you the risk to reward ratio. With the risk to reward ratio and the percentage win rate, you are able to calculate the sizing. And once you are able to calculate the position sizing, example, I invest 5% of my money into this strategy, you are able to have better state management. At most, I lose 5%. So, okay, another strategy win, I'll win back. So the 3S of investing is extremely important. And I'll be going through with you each of them, okay, throughout the next few weeks. Okay, can you please type 3S? It is just too painful to lose money. I agree. Okay, there's a there's a risk aversion. So if you win $1 versus you lose $1, right? The pain of losing that $1 is a lot greater. Okay, I think I was reading a research. They say that the kind of intensity of feeling of losing money is about 3 to 5 times more intense than us making money. So losing money is something we need to learn. Okay, we need to learn how to lose without losing sleep, without like flaring out with, like becoming angry with our family members and things like that. We need to learn that. Okay, so investing is a professional skill. It is. That's why I call it investing university. It is not something that we can learn very quickly. Okay, unfortunately speaking, from my years of experience. SG is a very risk-averse country. That's true. That's true. Hopefully that because of that is an advantage to us. Now, today I'll be covering some of the strategies and we will get kick-started with some of them. So there are 4 key things that, this is again based on my experience. I'm sure there's more, which I don't know. Okay, and I'm still exploring. Fundamental, technical, quant, and options. So let me explain to you each of them. So every single strategy, right, there is a thesis. Why, if I use this strategy, I put $1,000 in, I will get $1,000 or $2,000 back. Okay, why? Why? What's the thinking behind it? The thesis for fundamental strategies or value investors is to buy good companies. We believe that, okay, for fundamental investors, they believe that if I buy this company make more money, have higher revenue, open up more branches, the stock price definitely go up. But cannot be this company only got, let's say McDonald's. When we first invest in McDonald's, only got 1 branch of McDonald's. Now they got 33,000. They got 33,000 restaurants all over the world. You cannot tell me that when they only have 1 branch, the value is the same as 33,000 branch. Cannot be what. So therefore, the stock price must go up. This is the theory of fundamentalists. Okay, so fundamentalists believe this. But so far, is it logical? I mean, however, I can tell you the stock market is not always very logical one. So the key weapon they use is financial results and valuation. Okay, so who are the successful people in fundamental strategies? Can you all name me some? Can you all name me some fundamental investors who are very successful? I just have a few names up there. WB, Peter Lynch. Oh, very good. You all can guess most of them. So Warren Buffett make 20% over, I think 60 over years. Okay, but initial years, right, he actually make 100% one. Now Peter Lynch make 29%. There's also quite a lot. Sir John Templeton. There is Mario Gabelli. There is Walter Slosh. So many of them. Even Ray Dalio. I heard that his office is in Singapore right now. Okay, he make about 12% per year also. Now, I know some of you who have been following me, they will say, wow, Sean make 100%. These people only make 20%. You must understand the magnitude is different. They are managing billions. For me, a few million dollars. Warren Buffett said this, if you give me $1 million to manage, I guarantee you 50% per year. Well, very bold, but I know that he can make it. Okay, can So I want to share any thoughts about the Visa 5% layoff, monopoly lawsuit. Price was not affected, instead it's bullish. Well, the stock market in the short run, right? It is affected by many things. And sometimes we don't even know what they are looking at. But in the long run, fundamentalists believe if the company makes more money, they are worth more, the stock price will also go up. So the key weapon for fundamentalists, which I want all of you guys to also learn, it is financial statements. If you look at the number and you feel like vomiting, maybe you cannot become a fundamentalist, or maybe you should think of other ways to invest. Maybe buy a property instead. Okay, how the janitor take profit, is it? I did not have the details of how the janitor take profits, but I believe that he upon death, right, he's still holding onto the stocks. That's why they can see what are his stocks holdings. Does it make sense? And in US, unfortunately, if you hold the stocks until you die, there's even an estate loss. Estate loss means you have to pay tax on all these gains that you make. Well, even after that, he still got $8 million. Okay, Ken? So, okay, now, fundamental strategies. The next one, let's talk about technicals. Okay, by the way, sorry. Let's talk about the power of compounding first. Now, imagine you got $5,000 to invest every single year. Okay, I'm going to give ourselves 30 years to invest. You can plus minus go and work around it. So interest rate, let's say we are able to make 15% per year. I don't know. Can you share with me, guys? Is 15% high, or is it low, or is it okay? If you think it's low, help me type L. If it's high, help me type H. If it's okay, help me type okay. Okay, so average. So depends on your skills level and also your experience, right? There's no right or wrong, because maybe to Warren Buffett is very low. Maybe to Jim Simons is like, what nonsense is 15%? But to maybe someone who doesn't know how to invest yet, 15% is like crazy, it's impossible to get. When I first started investing, I didn't know what is high, what is low. So 15% doesn't sound like a lot. But after investing for about 5 to 10 years, 15% sounds like a lot, because it's like How do you get 15% consistently? Okay, but after like managing, mastering certain skills, actually it's very, very manageable. Okay, cannot better than DBS. Well, if you can't win them, maybe you can buy them. So you can see that if this happens, 5,000 every single year for 30 years, maybe you can invest for children, invest for retirement, you can change to 20 years. The result is this, you get $2.8 million. Now, is having $2.8 million something that is nice to have? Well, that's why it's not surprising why the janitor get $8 million. Probably he has a longer years to invest, and probably he invests even more because the article says that he saves a lot. Okay, Kenna? So it is possible everybody of you can become a millionaire. Can you all please type me? Me. Millionaire is a minimum for you guys who actually go through investing university. Okay, so this is the aim for you. Of course, but the 3S this is strategy only. State management and sizing is very important. Now let's talk about technical strategy. For technical strategies, TA, technical analysis, the investment thesis is the price pattern and charts will tell me when to buy and when to sell. So some of the famous one, okay, can you name me some of the famous technicians? Do you all know some of the famous technicians? So they look at the price chart and they say, okay, when it hit a certain point, there's market psychology behind every single price. We will go through those as well. Just to be very open, I do not use this a lot. I use this on a certain basis and a certain basic setup. So let me see whether I can get some experts to come in and dive in a bit deeper. But otherwise, you can learn together. Okay, Paul Total Jones. Jim Simons is not really a technician actually. Okay, so for Jesse Livermore and Rachel Dennis, this is a turtle trader. These two doesn't have recorded CAGR. What is their yearly percentage? But we know that they are multi-millionaires. Okay, I think it's because they are also doing a private fund or they don't even manage money. So these are the things that technicians look at, the price chart. So the price chart, I've met very powerful technicians before. They will tell me when the price go up, when the price go down, and I can tell you half the time they are wrong. But they still make money. That's the important thing. I don't know whether you all met those people with TA before. No? They read the charts and say, I tell you the price is going to go to this level. Wrongly, but still make money. It's because I can tell you strategy is only one portion. Their position sizing is very important. Extremely important. If you can relate to this, something like ARA. Like, the charts are actually not every time correct one. No, there's no 100% correct. But they know already percentage win rate and also risk to reward ratio. Now, the next one, okay, this one is getting more and more famous or more well known. Actually, not a lot. I realize it's only myself because I read more and more about it. It's called Quant strategies. Quant, okay, we literally call them quants, and I actually identify myself as a quant nowadays. Okay, is decode using data and machine. So this one is like we believe that actually all the data, right, tells us a lot of things. It can be fundamental data, it can be technical data. Okay, and some of the famous quant people, I think some of you mentioned Jim Simons. Okay, 66% per year. So far, no audited results has beat his results before. Yes, Edward Top, you mentioned Peter Mauler. Okay, there's quite a number of them. Okay, so even Ken Griffin. Okay, Ken Griffin and quite two Sigmas. A lot of them, they are getting more and more famous. And if you want to be a quant, these are the things that you will see. Coding. I realize it's something that has a certain hurdle, and that's why a lot of people may not be able to get that so easily. A lot of platforms nowadays, they are trying to make all this easier, allow us to backtest, allow us to auto trade. Like Options Alpha is one of them. Options Omega, Alpha and Omega. So all these platforms are trying to make quant something accessible to normal people like you and me. For me, I'm using this platform at the same time. I'm also diving into coding because after a while, I'm just trying my best. As I read more and more of codes, I realize actually readable. It's like another language. Okay, so this is something that if you are interested in coding, becoming a quant, I'm actually getting my Dr. Christine, who is a PhD in coding, right? PhD in computer. She's a PhD. She's a dean of computing to actually go through all this as a module. Okay, because we want to find people who are passionate about this. Not for everyone. Okay, this one is really for people who are crazy enough and geeks. And if I'm losing you right now, probably it's not for you. Okay, Kenna? Okay, so now let me share with you last portion, option strategy. Now, option strategy, right? It is a add-on to quant, add-on to fundamentals, add-on to technicals. Okay, the investment thesis is we don't really invest in options purely just using options, but we use it based on the particular strategy. So it's an add-on to a strategy. It is used to enhance returns, reduce risk using options Greeks and also risk graph. So some of the famous people who uses options, actually you will see repeated names. Jim Simons, Warren Buffett, okay, and in fact, this is a quant, this is a fundamentalist, this is a technician. So quite a number of them in the end also use options. And what do you see when you look at options? You will see risk graph. Okay, this is something that to me is very beautiful. I said, wow, if I can actually do a chess piece and play like this, right? Wow, the risk graph, my risk to reward will become very beautiful. How many of you are familiar with risk graph? If you are, help me type RG. If you are not, help me type 0. In the weeks to come, I'll be going through all this with you guys, step by step, but not within 1 week now. Okay, every week we improve bit by bit. Otherwise, maybe a bit too overwhelming. So far, so far is it okay? I'll call number of 0. You will learn to love the risk graph, because once you see that, you realize you can immediately see what's your risk, what is your reward, what is the probability of winning. It's really beautiful, in my opinion. Okay, so this is options. So now, today I want to start with fundamentals, because I want to get you guys started. And I believe that actually I'm bringing you guys through my journey. What works. So it may not be the standard, or I don't know, maybe a university when they design this. I don't know how they design this, but I go through my journey and I go through things that I believe will help you succeed as fast as possible with as little issues as possible. Okay, so this is from my personal experience. That's why it's not a financial advice. So starting with fundamentals, right? I think just now someone was asking about S&P 500. How many years did it go down? How many years did it go up? So let's start with this. Now, a good way to get started, not an advice, it's an advice by Warren Buffett. He said that a low-cost index fund is the most sensible equity investment for majority of investors. Do I agree? Actually, answer is yes. Okay, answer is yes. So that's why, actually, after going through investing university, if you feel that, wow, it's too much for me, all these things is over my head, maybe you can take Warren Buffett's advice, not my advice, okay, to look at a low-cost index fund, which I'll be going through with you guys how to search for them. Now, and when I created my fund, my aim is this now, to actually beat the S&P 500. If I don't beat the S&P 500, myself, you just invest in the S&P 500. Okay, so now, what is S&P 500 and how do we invest in it? By the way, just want to share with you guys, Warren Buffett mentioned this many times. So Buffett said that, okay, 90% in a low-cost S&P 500. So what is S&P 500 and how does it work? Now, for those who are very new, you have not heard of S&P 500 before, can you please type 1? I want to understand, like, are there really people who are so new that they don't even know what's S&P 500? No problem. Just tell me. Okay. Yes, I'll be putting all this onto the YouTube. Okay, Yan Yi, thanks. Hey, Wusha, you sure or not? You're quite a seasoned investor, what? Hey, y'all don't smoke me. Okay. So now, S&P 500, right? Okay, if you hear the US market is up by 2%, US market is dropped by 100 points. They are talking typically about the index. Every country has an index. Singapore has this thing called STI. Okay. So, okay, let's talk about S&P 500 first. S&P 500 is an index. Index, right, is basically a measurement, like a temperature. So, today's temperature is 32 degrees. Today's temperature is 50 degrees. So, how do they measure the temperature? A temperature is just an index. There's nothing. You cannot buy a temperature. Thanks for drawing this. Wait, let me just clear this. Okay, so let me explain to you. So S&P 500, how do they measure whether the stock market goes up or down? They take 500 plus minus. Okay, it's not exactly 500. 500 of the US representative stock. When they say representative, right, they actually find the best. The best as in they must have certain market cap, certain liquidity. Usually in the stock market's opinion is the best. And then, okay, maybe inside there got Apple. Let me just go through S&P 500 very quickly. S&P 500 components. So these are the S&P 500 stocks. The biggest, 7% is Apple. Okay, why the weightage is different? Because as this company become more and more valuable, it takes up a bigger weightage. So you scroll down, there is how many stocks? Everybody's going to guess 500, right? Let's see. I think it's 501. 503 stocks. Okay, so there's about 500 plus minus stocks. Okay, so you can see, right, some days, this is every day, some days Apple went down by 2%. However, Nvidia went up by 2%. Microsoft went up by 1.55%. Amazon went up by 0.45%. So did the stock market go up or down? So confusing. So by adding all this up together, they will tell you that S&P, the US stock market. So this 500 represent the US stock market. They will tell you the US stock market went up or down. Okay, let's see. Did it go up yesterday? Okay, yesterday I think it went up. It gap up. Okay, and all this, right, this S&P 500 ETF is basically buying these 500 stocks that mirrors, okay, that actually represents the US stock market. Okay, so according to Warren Buffett, he said that, hey, just buy S&P 500 as cheap as possible can already. As cheap as possible, as in don't pay too much management fee, and you should do well. This is what Warren Buffett advised. So does S&P 500 work? So let me give you guys a scenario, okay? Let's say, can I ask you guys, when is the better time to buy? Is it better to buy when it's L low or H high? I just want to test your understanding of what's investing. Is it better to buy L or H? Low. Okay, great. So at least this is, if you don't know, can you please tell me? Say question mark. I also don't know. Should I actually buy higher? Well, investing, when you buy low, you pay, let's say, $300, 300, and you can see the number here, $374. Then you can sell at 400 plus. That's how you make money. You buy lower, you sell higher. Understand? So it's a basic way of investing. Later we will go into more advanced strategies on that. So let me give you a potential possibility. Let's say after investing university, you say that, well, I really don't want to go in depth into fundamentals, into options, into quant. Wow, the coding is going to get me crazy. I'm just going to buy S&P 500 because Warren Buffett says it's good. So you don't know when to buy. You say, every year I'm just going to set aside $2,000. I remember I saw that janitor invests few thousand and he makes money and become millionaire. Let me try that. So every year, you just take $2,000 and you buy. And I'm using this as an example. SPY is an ETF. ETF means they set up a company. And this company asks investors to put in money and they take the money to buy that 500 companies. Okay, so this is what an ETF is like. So you're buying shares of the company that takes your money to buy 500 companies. Okay, so you can buy and sell the shares anytime of this company that holds that 500 companies. So you say that, okay, I'm going to take $2,000 a year. $2,000 a year, and I'll just buy it during my birthday. Somehow, okay, maybe not during my birthday. Somehow, miraculously, every year your birthday is here. Okay, after you buy, yay, birthday, then boom, the market goes down. Can I ask you, if every year you keep buying on the high, after 10 years, after 11 years, do you think you will be making money if you always buy the high? Yes or no? What do you think? Okay, some of you say yes. What's the difference between SPDR, SPY? Okay, S&P 500 is the index. Got it? Okay, so again, let me show you this. STI index. So STI, can you buy STI index? Answer is no, because it's an index. Can you buy the GDP? Can you buy GDP? Like, what do you mean by GDP? So every quarterly, Singapore will say our GDP increased by how many percent? Can you buy that index? It's an index, okay? What other index do we have? So we have a straight sum index. We can't buy the index. But how do they calculate the index? They calculate the S&P. So remember, S&P, STI, all these are index. S&P 500. These are index. Okay? So you see, this index have a number, 5975. This is not something you can pay $5,000 to buy. You can't. It is just a mathematical number. So same thing for STI, you cannot pay this number to buy STI. You cannot. It's an index. Understand what's an index? So there's many index. There's inflation. Inflation is an index. Consumer price index. Can you buy inflation? You can't. Understand? It's just an indication. However, people say that, hey, since this index, right, it is so this index seems like it shows that it's always going up. Is there a way we can actually invest so that our money also goes up by that? Then they say, okay, how do they calculate the index? They calculate the index by using an average of these 500 companies. Remember just now we showed? So this S&P, there's 500 companies. See, and these are the 500 companies, and these are the weightage that forms the index. Okay, that forms the index. So they say, then might as well we just buy these 500 company can already. So this is the whole idea. Got it? So now, later I show you guys, maybe I jump ahead. I actually prepared this. There are many ETF. ETF basically is exchange traded fund. These are purposely set up to actually buy those 500 company. So there's a S&P 500 ETF. There's STI ETF. Again, ETF, it is a fund. The fund's purpose is to buy all the companies in the index, and you can exchange. When they call it exchange traded, means that this fund you can buy and sell anytime. Last time, if you go to unit trust company, you go to insurance company and you buy unit trust, maybe not last time, even now, you can't buy and sell using your handphone, correct? I'm not too sure. Okay, you have to go and call your agent, you have to sign a form, and maybe 2-3 days later, they will help you settle. However, an exchange traded fund, that fund, not unit trust fund, exchange traded fund, okay, you can buy and sell anytime. That's why it's called exchange traded fund. And there are many ETF that try to use S&P. Can you see S&P 500 ETF, SPDR? SPDR is the company's name. So it is actually, okay, what does SPDR stand for? I can't remember. SPDR, okay, is, what does SPDR stand for? It is actually the company's name now. So example, if I have a Sean S&P 500 ETF, then it's called Sean's S&P 500 ETF. It's just a branding. It's just a branding. Okay. So let me show you this again. So you can actually look for, you see, there's iShares. iShares is another company. Vanguard is another company. Invesco is another company. Can you see that? So Vanguard, mainly these are the few. SPDR, iShares, Vanguard. These are different companies providing a service, and their service is the same. We take your money, we buy S&P 500. Can you see that? Does that become clearer? Does it make sense? I hope Spider something. It's not Spider something. They actually it's a nickname. Spider is a nickname for SPDR. Okay, SPDR. Okay. They are pronounced as Spider, but they are actually they have a certain, is Standard and Poor's Depository Receipt, SPDR. Okay, so this is their company's name. Okay, got it? Okay, now let's come back to here. So let's say, okay, let's invest in either SPY, VII, VOO. Later we take a look and see which one we can invest in. But I'm going to use SPY as an example. Okay, so example, every year we buy the high, we buy the high, we buy the high, we buy the high. Okay, so let me show you what's going to happen now. I did a study on my spreadsheet. You can see I downloaded over the years all the historical pricing of this particular ETF called SPY. So every year there is a low, there's a high, there's an average. So if you buy low, okay, you spend $2,000, you go and buy the low, you get more units, correct? You get 9.8 units. You buy highest, you buy expensive, you get lesser units. So far, can you understand? Because if you put $2,000 in, and let's say when you go in at time, wow, the price is $73. So you can afford to buy 9.8 units of them. Okay, you can't really buy 9.8, can you? Actually, nowadays can. So if let's say when the price is high, then you buy after your birthday, you go and buy, you buy lesser units. So definitely it makes sense to buy more units. More units means preferably, hopefully every year we can buy them at the low. But you can see that every year the month is different one. So I'm trying to see, is there a trend? Which month is always the lowest but don't have? So sometimes it's January the lowest, sometimes it's November, sometimes it's July. So I went to track all this. Okay, from 2014 all the way until 2024. So if let's say every year we invest $2,000 from 2014 to 2024, we will have invested 22,000. So it's actually 11 years. So far, are you getting me? So if let's say you keep investing 11 years later, you have invested 22,000. Now, the question is this. If you have invested in the high, you buy the high, right? Will you lose money? Okay, that's a question, right? So let's take a look at SPY's pricing now. Okay, let's take a look. SPY's latest pricing. Again, later we can look at other instruments like VO and things like that. So SPY's latest pricing is 595.36. So let me go back to my spreadsheet. Today is 595.36. Okay, the calculator will calculate for me. So take a look at this. If you have invested at the highest point every single year, you keep buying and keep buying. Every year you just buy. And then why is it always the highest? At the end of 11 years, you would have made, okay, your 22,000 would have turned into 50,000. So double. You have compounded at a CAGR of 8.58%. Now, what do you think of these results? Means that every year you invest in the worst time and you get 8.58 without including dividends. Okay? What do you think of these results? Can you give me like a word to describe? If let's say you just keep investing, well, 8.58 at the end of 11 years, every single year compounds at 8.58. It's not at the end of 11 years, there's only 8.5. It's not bad, correct? It's not bad. Okay. But don't need to go and invest at the worst time, correct? If you invest on average, right, it's about 10%. Again, if you include dividends, maybe about 12%. And then finally, if you invest in good times, about 11%. But overall, for S&P 500, this year, actually, I think it went up quite a lot. Okay. Overall, can we expect this kind of returns? I think for now, based on historical data, it's not a representation of future data, but I think it's something that is safer than a lot of other investments. Okay, got it? So it's unbelievable. Well, okay, you know why is it unbelievable? Let me share with you the theory behind this. Okay, why is that so? Well, how can we always invest in the worst time and still make money? Because let me zoom out for you. Can you see S&P 500 given time? This S&P 500. Okay, let me go to 5 years. Okay, it will go up and down. But can you see that over time, it still becomes more and more expensive? Let me go to, let's say, all time. Let's say 2014 is here, correct? So this is what they call dollar cost averaging also. So 2014 is somewhere here. When you bought it, it's about 100 plus, then keep going up. You keep buying. But those that you bought initially is worth a lot more than, let's say, those that you buy subsequently. You see, even the here you buy at a high, right, it's still at a low compared to now because it keeps going up. Question is this, will S&P 500 continue to go up? Now, do we know? Now, there are a few theories to suggest that it will. Reason being this, okay, there are a few theories. Number one, inflation. Things are getting more expensive. And let's take a look, who are those people who cause inflation? Who are those companies that increase price? Let me present to you. The S&P 500 companies. Apple's computer becoming more expensive. Agree? Microsoft also more expensive. Meta, all this. For those who are doing advertisement, you also know. So these are the guys who are causing inflation. Okay, they are not causing inflation, but they are also one of the drivers that make things more expensive. And you guess what? When they make things more expensive, it means that they are getting higher revenue. And so fundamentalists believe that if these companies charge more money, make more money, stock price will also go up. So far, does it make sense? So unless you believe that things will become cheaper next time, then maybe S&P 500 may not be viable. Now, so there are quite a lot of questions around this, which we can discuss further. But I'm going to wrap this up. Okay, going to wrap this up. So I do hope that this is useful. Okay, is this useful so far? If it's useful, how many type you? So S&P 500 has been working. Will they continue to work? In my opinion, again, not financial advice, I think they should still be working for the next 5, 10, or even maybe 20 years. But I'm always keeping an eye on it because other superpowers like China, India, they are overtaking. Okay, so we may actually shift our attention to other indexes. But in terms of stock market maturity, US stock market is still the most mature. Now, how to choose S&P 500? You can see these are the S&P 500 ETF. There's SPY, IVV, VOO, and these are the expense ratio. How much are they charging you every single year? And you can see for S&P 500 ETFs, right, the cheaper ones will be these two. Will be IVV and also VOO. One is by Vanguard, one is by iShares. So it's basically their returns is about the same. Okay, but of course, if you look at it this way, VOO is the best. Later, I'll also put the link here. I'll also put the link inside the Telegram group on how to go and access all this ETF. Okay, this is from ETF.com. And you can actually filter them, okay, by location. I filtered them by location and I chose US just to share with you guys, okay. I chose US for S&P 500. And then I also classification, I chose equities, okay. So that's how S&P 500 came about. Okay, so you can take a look at this. All right. So now, before I end off this session, right, I still got a homework for you. So a few homework. Now let's start with the fundamentals. I want to go through the last activity with you guys, and then we can end this. I'm a bit overrun. The last activity was an activity that one of my previous business partner did together with me. Many years ago, I remember we were in Vietnam on this particular trip, and he asked me this question. It's a brilliant question. It's a brilliant question. He said that, you know, the stock market, right, has so many amazing companies. There's Amazon, there's a Disney, there's so many companies that's making so much money. Imagine you can own that company. Can I ask you guys right now, if let's say Santa Claus came and then say, I'm going to give you one of the companies. Which company do you want to own? Which company do you want to own? Okay. What goes up must come down. Not necessarily. Like prices don't come down. Inflation didn't come down. My age also never come down. My handsomeness also never come down. Okay, just kidding. So okay, so you think about it. Hey, seriously, man. Sometimes I just think, wow, you just give me the McDonald's near my house. Okay, can already. Well, you know how much money they're making or not? Okay, I really need you to see companies as real companies. Got it? How much money are these businesses making? So he asked me this question. Hey, if let's say the stock market really goes down and then there's a big discount, which are the top 3 to 5 companies you will want to snatch out so that they work for you for the rest of your life? Do you want Jeff Bezos to work for you for the rest of your life? Do you want Elon Musk to work for you? Actually, I'm not very keen on Elon Musk. Personal preference, personal preference. I feel that he's a bit unpredictable. Do you want, let's say, Mark Zuckerberg to work for you for the until he retires? These are geniuses, you know. These are billionaires working for you because you buy their share. So this question, right? Years later, okay, when my kids start to invest, I also ask them because a couple of years back, I was asking them what Christmas present they want, and they say actually don't really need anything. So you can see, this is their investment account. Not say a huge account, $1,000 over dollars, but you can see last year S&P 500 make 23%. This is 2024. Okay, my kids their portfolio makes 48%. So they are better than a lot of fund manager. Actually, I saw quite a lot of people sending email, sharing it with people their investment results. And I said, hey, my kids' results are actually not bad, you know. Beat quite a lot of the funds. Not bad, right? But again, it's a small size. Now, do you know how they pick stocks? They didn't look through the financial statements. They didn't look through valuation. The question I asked them is the same question that my partner asked me many years ago. Which company do you want to own? Which one you believe can make money on? So let me show you. Let me show you. My kids have, okay, you see, so they chose this. They chose Disney. Not the best investment. I mean, for those who are into investing, you know that Disney went up, went down, but also make 29%. They chose Netflix. They chose Amazon. They chose, this is Google. Alphabet is Google. And all these, right, actually got a common trend. You know what's the common trend? Anybody knows this for what is the common trend? It's very, very common. Anybody knows not? The common trend is we watch their shows. We have Amazon Prime, we have Disney Plus, we have Netflix, and we also watch YouTube. So I realized, wow, my kids are video addicts. Okay, not them, actually myself. I also watch together with them. They say, hey, wow, we watch all this. Then they ask me how much do we pay, and then they say, hey, okay, since we are paying for all this, let's buy this company because they believe will succeed. And true enough, not bad, not bad, huh? So I thought it was pretty good. Okay. So I thought it's a good start, and I want to actually encourage you guys. Don't need to go through fundamentals, all these kind of things initially. Your homework is this. Okay, can I give you guys homework? Start time as early as possible. My kid, like even the toy catcher machine and all that, I start them when they were in primary school or like maybe 10 years old, 8 years old. Talk to them about all this. But if I ask them to go through, let me show you financial statements, come and join my investing university, they will feel that it's very boring. So I make it entertaining for them. Like, hey, tell me which companies you want to buy. Okay, and make it real for them. And they can see the results. Okay, Ken? Okay, so again, guys, investing university, I hope that session number 1 has been useful. If it's useful, it's beneficial to you, can you all please help me type 1? Okay, this session 1. And the activity for today, right, two things. Okay, I want you to set up your brokerage account. If you're very, very new, for those who are very new, don't have brokerage account, later I'll send you a link. It's not an affiliate link. I do not benefit from it, but this is the account that I personally use, and I think it is the most reputable. I think some of you know, quite a number of brokerage firm also approach me, say, hey, can you help me to help us affiliate our brokerage account? But I find it very difficult to affiliate something that I personally don't use or I don't think is the best. Personally, I think Interactive Brokers is reputable enough. They may not be the best in terms of pricing and things like that. Actually, it's quite good already. It's very decent. How many of you using Interactive Brokers? If you are, can you help me type IB? So for the new ones, you can type Interactive Brokers, and I'll be going through sessions, right, to show you how to use it because it's not easy to use. Okay, it's a yeah, maybe other brokerage is a lot easier to use. I'm not recommending that you must die use this, but this is something that I use and I'll be going through this. Okay, so this is the first thing. Number 2, please set up your company shopping list. Okay, what do I mean by your company shopping list? Means that your company means which companies you want to buy. Is it Tiffany and Co? Is it okay? I was actually talking to one of my team members. She said, I want to buy Labubu. So do you know that Labubu company is listed? Okay. Okay, yeah, I'll also be talking about IB, how to subscribe for live markets data and things like that. I think it's a necessary evil. Okay, so okay, okay, I saw quite a lot of good questions. You can continue to ask me in the Telegram group. Okay, Ken? So you heard of this thing Labubu or not? You all know Labubu is listed? I don't know how long it will last lah. But Labubu, oh yeah, the stock yield enhancement program is good. Yes, Labubu is under PopMart. Okay, and PopMart is actually listed in Hong Kong. Okay, stocks price. Okay, so it's a listed company, and I didn't know until my team member actually shared this with me. So price went up, price went down. We can look at the fundamentals, which is what we're going through the next few weeks. So 2 homework, set up your brokerage account and we will start to master how to use it. And second one, I would like to have 10 companies. Can we do that? Think about 10 companies and then we share it in the Telegram group. Is it okay? So in the Telegram group, later I'll be posting the recording, the homework, and the links for you to actually go and set up your brokerage account. If you haven't set up, again, it is not an affiliate link. I do not benefit. For those who have affiliate and you all think that you all can benefit, no problem. Go and help your friends. I'm cool with that. Okay, but don't post things now. Okay, because the Telegram group there's quite a lot of scammers also. Okay, and then the next thing is please write down 10 companies. 10. Can you all please type 10? Just have fun shopping now. If you only can think of 3, just type 3. Okay, just share 3. Which are the 3 companies you believe right they can make money for you for the rest of your life? Then the next few weeks we will be going through income statement, balance sheet, cash flow statement, financial ratios. You will become I won't say expert okay. I don't overpromise. You'll become a lot more familiar. Like, oh wow, this is the way that we look at companies, whether they are doing well, whether they have the potential to do well. Okay, Ken? So I do hope that you guys are excited and you are ready to really do all this homework. If you are, help me type Y. Y for yes. Y for yes. Okay, Ken? Okay, now the last portion, a bit of promo, because people have been asking me what is SIC, what is other things. So very, very quick one. So for those right who are interested in SIC and all that, very quick 2 minutes promotion. Okay, I just share with you guys openly. But in fact, you're just focused on investing university. This one is for people who are a little bit more advanced already. If you are not advanced yet, may not be the best idea unless you are a very proactive self-learner. So what is SIC? Very quickly, SIC Club, right? There's 4 key things you need to know. Number 1, I'll be sharing my live portfolio strategies, which, I think this year went up by 127%. This few days went up by 5% because we do 0 DT. We do advanced strategy. The reason why I'm starting this Investing You is because during SIC, I really want to talk about advanced strategy. How many of you are from SIC? If you're from SIC and you think it's not bad, you can type SIC, okay? So if you think it's not good, then why you stay, right? Okay, so the second portion is there'll be telegrams. So I have this telegram, we talk about our trading plan. Okay, my goal, right, is to make SIC the most valuable club and program ever. Okay, so this SIC, you can see all my wins, all my losses. You can see my trades before I post them. So I don't know whether it is useful for everybody, but it's something I wish that someone who have done for me when I first started. So I actually talk about at least the trade. And if you're very new, you don't know what 0 DT, don't sweat it, okay? Because the third portion, right, we continuously have new strategies. Okay, I think last year we tested out many strategies. Not all of them work. Okay, I'm not God. Okay, so this is the beautiful thing we actually learn together. So advanced option strategy, and this is fresh from the lab. So this advanced strategy, right, will be inside all this recording. So I am still aiming to keep improving them. So once you're in SIC, you'll see all these strategies: resource library, pairs trading, 0 DT explanation, Kelly criterion. So you can actually watch them from down up. Okay, because we are actually focusing on quite a number of this. Got zebra strategy and things like that. So I think some of my team members went through quite a few videos over the weekend. And then the last portion is this. I wanted to make SIC not free, but affordable. Actually, I was struggling for quite some time because SIC is something that I really want to make it very valuable. So my concern is this: if I make it free or I make it very low ticket, people may not treasure it. Because sometimes when you pay a lot more money, you feel that it's more valuable. So you pay very little, you feel that this one cheap stuff, not something I should focus on. Do you guys agree with that psychology? If you agree, you can type A. This is my concern. But I really want to make it very valuable. So I just want a very small amount of commitment, but I want you to know that I'm pouring my heart and soul into this. And whatever advanced strategy, when my researchers and subsequently when we open up the research labs for to train to some of you guys who wants to be researchers we will be sharing the strategies with SIC. So literally, you know what my fund is doing. Literally, you know what my portfolio is doing. I don't know whether you all think this is valuable or not, but I really hope to make it valuable. So again, it is a small token to make each other accountable, because same thing if let's say totally free, right, then I also not accountable to you, then actually I don't feel like doing. I say, forget it Hey guys, bye. All right. So also a small commitment. So all these strategies, all these kind of things, right? Actually, you all know that this particular SIC, the price is very affordable. It's only $39 a month. And if you break it down per week, it is about $10 per week in USD. So every session we do, right, is, I don't know how much is it worth to you guys, but literally you're setting aside $1.30, which is like newspaper, okay, to come and join SIC. So by the way, if you have not joined SIC and you're interested, there is a 2 weeks trial. Okay, if you have not joined and you are interested, you can type me. I'll send you guys the link to the 2 weeks trial. join us because this Thursday, every Thursday, I'll be teaching something or going through something. This Thursday, I'll be going through two things again. Number one, I'll be going through pairs trading. Now, pairs trading, I've been pouring a lot of attention inside there. I really feel that the chance of us making money from pair trading, even when there's a bear market, is very, very high. And it's been proven already. So I'll be going through in-depth pairs trading. Number two, I'll be going through Iron Condor, not zero DT Iron Condor, Iron Condor. Because I realize a lot of people cannot sleep because of zero DT. I don't want that to happen. When you master Iron Condor and you learn about adjustment, I'm coming up with a new strategy. So I was talking to my researchers. Can I just check something? Okay, this one, sorry, quite excited. How many of you were with me initially in the earlier Iron Condor? The earlier Iron Condor where we do adjustments. If you are there, when you saw me do adjustments, initially from losing become winning one, can you type me? Okay, can you type me? So I'm thinking, if let's say the earlier one can do adjustment, what if zero DT can also do automated adjustment? Every time go near the goalpost, I push the goalpost away, push the goalpost away. You know what I'm talking about? Okay, if it's too chim, don't worry, I am this is my brainstorming stage. I want to backtest certain things. Imagine we can create a zero DT that never loses. Okay, chance of losing very, very low. Even lose, also lose very little. Wow, I think people can sleep already. I don't like the fact that people are losing sleep because of a certain strategy. Okay, Ken? So yeah, we can actually do the rollover. So we are not push over, but we learn how to roll over that. Okay, so these are all I want to share. So for those, okay, later I'll post everything else in the Telegram group. How many of you are, you're all from the Telegram group, correct? Must be lah, because I only post this Zoom link on the Telegram group. So give me some time. The recording will be up. Then I'll be posting it on the Telegram group. And for those who have not signed up for SIC, I mean, I'm very proud of this particular group, not just because of myself, but because of the people inside the group. I really see a lot of people growing now. So I'm also very excited to grow this club together. Okay. So I'll be sharing a 2 weeks free trial link. But for those who already signed up for the 2 weeks, then don't have already lah. Okay. Okay. For those who okay, let me send you all two things. Now, for those who don't have SIC, this is the link to sign up for SIC. For those who sign up for SIC already, but are not able to access the Telegram group, correct? Let me send you a email for you to hang on, inquiries. So please help me email this in so that my admin can help you. My ops people can help you. Okay, Ken? There's a lot of scammer in the group. Yes, correct. Hey, so last thing is this. Inside the Next Level Telegram group, if people post links in the comments, okay, let me show you guys. If they post links in the comments, please don't go and click. Okay, so you can see this is the Next Level official. So any link I'll post in the main post. The comments got a lot of very hardworking individuals who are posting all this. Please don't click any links in the comments. Later I go and clear it out. Wow, this guy already, is it automated or not? Okay, Ken. So I do hope that all this has been useful. If you guys find this useful, please help me type NL, Next Level. So our goal is to build this and then grow together next level. And let's build our financial makeover, make it clean, become good stewards, have financial peace, and also grow our money like a professional fund manager. All right, I'll see you guys, and the recording will be out. Go to the Telegram group. I'll send you guys the resources as well. All right, see you. Bye-bye.